This morning, some tech news to get to as well. Of course, a fight that I've been following so closely here between Broadcom and Qualcomm. I call it a fight, although there was a conversation that took place on Wednesday between these two companies right here in Manhattan. Their management teams, their advisors all sat down for a couple of hours to discuss if there was a deal to be reached. Remember, Broadcom, of course, is offered $82 a share in cash and stock and a certain willingness to divest certain properties. In fact, this morning at 8 a.m., Qualcomm did put out its response to that meeting. And in it, it indicated that it is still finding the offer from Broadcom unacceptable, though it did term the conversations constructive. It doesn't really appear to leave that much open, at least based on what I'm hearing as well from people close to Broadcom in terms of these two companies being able to find common ground prior to the March 6th annual meeting of Qualcomm shareholders, in which they will vote to either seat the 6 directors that Broadcom is seeking to seat to take a majority of the board or not. This morning in its statement, Qualcomm did go on to give a little bit more detail on its potential opposition and continued concern when it comes particularly to the antitrust or regulatory concerns surrounding Broadcom's bid. It said Broadcom continued to resist agreeing to other commitments that could be expected to be required by regulators such as the FTC, EU, MOFCOM, and others. It also declined to respond to any questions about its intentions for the future of the licensing business. And Qualcomm says that would make it very hard to predict what antitrust remedies would be needed, given that they felt like they weren't getting enough information on just what Broadcom's plans would be for that licensing business. Of course, remember, it's a key part of the profitability at Qualcomm. They're right now, of course, having litigation with a lot of their licensees. In addition, they said Broadcom wanted to control all the material decisions regarding that licensing business during the period of time of an announcement of a potential deal and the close of that deal. That could be a year, according to Broadcom, maybe as much as 18 months, according to Qualcomm. But their point is, yeah, you want to give us an $8 billion reverse breakup fee, but that is not enough if you are going to paralyze our licensing business for that long period of time, not let us sign up new customers, not let us deal with the litigation, and do so many other things. We would find ourselves without a significant cash flow stream that would not be enough to be compensated by. So a lot of this is done for the benefit of ISS, the Institutional Shareholder Services, that makes its recommendation to large shareholders, particularly index funds. They wanted to see some form of constructive dialogue, and perhaps Qualcomm can now say, hey, we tried. We haven't heard from Broadcom yet, although I did have a number of people this morning characterizing the meetings in a less than constructive way. Let's just leave it at that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.